Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in, and today we're going to go over all kinds of data that pertains to the housing market and the incoming housing market collapse. We are seeing an overwhelming amount of cross currents and headwinds now. It's really difficult for most people to get a handle on the housing market because, again, on one hand, we have all of this turmoil that we can see, but yet we still have inflation all over the economy. CPI came out this morning and consumer prices rose 0.4% in September, and that is more than expected. Now, shelter costs were the main factor in the inflation increases, and that does account for more than half of the rise. In addition to CPI coming in hot, the labor market appears to continue to be strong. As you can see here, the U.S. job growth remains strong. The labor market showed continued resilience in September, adding 336,000 jobs last month, a sign that economic growth remains vigorous. Now, on top of that, we have the 10-year absolutely skyrocketing. Now, recently it did go down as a result of the Israel war, but it's been shooting back up as a result of the overwhelming inflation that is still persistent in our housing market. And you guys should know by now that the 10-year does track residential mortgage rates. So we'll continue to do the best we can at keeping our hands to the pulse of the housing market. But don't forget this. Remember, when it pertains to you and what you should be doing, well, I'll tell you what I'm going to be doing. Increasing my credit, my income, and my assets. And I'm doing all of the things that I should be doing right now. The fact that I'm renting, it's okay because I'm preparing for the future. In fact, I would say that if you're also preparing for the future and you're not buying, but you can buy, you're in a perfect situation. Now, society is out to make us appear as a fool, but I'm telling you guys, you are perfect. But either way, I know I'm not a financial advisor, and if you guys can, for this effort, let me know that you like these videos, like the video below, and if you can also, you guys, share this video and share this content. Either way, let's get started now. The name of this week's Redfin article is Housing Market Update. Listings tick up, what? But buyers back off. And this article is going to go over what home sellers are doing and what home buyers are doing and the advice that Redfin is giving to each. So let's take a look at that before we start jumping into the data. So here's what Redfin is saying about home sellers. What home sellers are doing. A few more homeowners are putting their homes on the market. Despite being locked into relatively low mortgage rates, new listings of U.S. homes for sale have ticked up 2% since the start of September. That's a beautiful, great thing, and normally that doesn't happen. Normally, that doesn't happen. And listings haven't fallen as much from summer to fall as they typically do. The total number of homes for sale is down 14% from a year earlier during the 4 weeks ending October 8th. But that's the smallest decline since July. Now, here's Redfin's advice for sellers. Take advantage of still rising prices. The median sales price is up 3% year over year despite low demand. But with the share of for sale homes with price drops at the highest level in nearly a year and high mortgage rates cutting into buyers' budgets, be mindful of setting a fair price. Redfin agents in some parts of the country report that many move-in ready, fairly priced homes are selling quickly. So their advice is price your home right. Don't be greedy. Now let's see what they have to say that home buyers are doing. Retreating. They're retreating as mortgage rates sit near their highest level in more than 2 decades. And the median U.S. monthly mortgage payment approaches almost $3,000 per month. Say that out loud. $3,000 average per month. That's psycho. 3 years ago, it was what, like $1,700? This is crazy. Mortgage purchase applications inched up slightly this rate, but they're still near their lowest level in nearly 30 years. And Redfin's Home Buying Demand Index, which measures tour requests and other early stage demand signals, dropped to its lowest level in nearly a year. All right, so let's listen to their advice to buyers, and I'm going to try to be unbiased and just read this. Advice for buyers. All hope is not lost for people who want to buy a home soon. Even though mortgage rates are likely to remain elevated, buyers on the fence may consider jumping into the market when there's a small reprieve. Along with a small uptick in new listings to choose from, daily average rates have come down some from the peak they reached last week. Despite last week's hotter than expected jobs report, rates had fallen after the Fed signaled this week that it is unlikely to hike interest rates again, and war broke out in Israel. Buyers should also remember that the average mortgage rate in the news is just that, an average. Many buyers can secure a lower rate by shopping around. The difference between rates among lenders is bigger when rates are higher. Buying down a mortgage rate is always an option too. So they've given no advice for improving credit to get a lower interest rate. They've given no advice to rebudget so people can easily afford a house. They've given no advice on how to know that you're getting a great deal, how to read the data, no advice on being patient. Literally, all of these bulls, the way that they talk, it always inches back around with the narrative that now is the time to buy. I mean, literally, in the face of the absolute worst time to buy in history, they're still spinning this, you guys, that now is the best time to buy. What is wrong with these people? Anyways, let's jump into this week's leading indicators. So the daily average is sitting at 7.6%, and the weekly average is sitting at 7.49%. Now, when we take a look at mortgage purchase applications, that is down year over year, 19%. If you are a professional in real estate, you feel the recession and job loss actually right now. We already feel it. It's just more people are going to start feeling it as it continues to spread. Now, take a look at demand. You guys, demand is down 5% year over year. And remember where we're at last year. This time last year, prices were plummeting, inventory was shooting up, and right now demand is even lower. Now, people searching online is also down a whopping 12% year over year. Really, really astonishing to see that. Now, take a look at median sales price, you guys. Median sales price did go down another $900 week over week, looking at the 4-week rolling average of median sales price. And it's not going to show it to us in the trajectory of the charts once again and again. I'm specifically saying, I think that Redfin is manipulating the charts because we don't see any trajectory. In fact, when I show you the graphs, it's going to appear that home prices went up, not down. Let's take a look at this week's winners and losers. Starting with the winners, we can see Anaheim is the #1 metro area with a year over year increase of 13.5%. You guys, I just heard like the Queen Bee cult leader on YouTube of realtor like lead generation that has been like demeaning all of us. She just said that home prices went up this year 15%. 15. You guys, these people are so brain dead and so like wrapped up in their own narratives to generate leads. They don't know what they're talking about. The #1 metro area right now isn't even at 15%. Literally anyone that wants you to buy right now is a psychopath. Again, the winner is Anaheim, #1, and then San Jose at 11%. Really crazy to see those up here because remember, they were some of the biggest losing metro areas last year and actually at the beginning of this year. So that's really, really crazy. And then we have New Brunswick at 10.5%, and then Providence at 10.2%, and West Palm Beach almost at double digits at 9.9% growth. But the losing metro area list is also growing. Now, the astonishing thing is we have all metro areas, big metro areas in Texas on this list. That is astonishing. And here's the thing, you guys. One reason I believe that is, like I said from the beginning of this year, is new construction. We have so much new construction in Houston, San Antonio, Dallas, Fort Worth, Austin. I think that's why Texas right now is leading the price decline. It's no longer California. It's Texas. Every major metro area right now in Texas has year over year decline in home prices, probably a result of the overwhelming abundance of new home inventory. Let me show you. We're starting with Austin down at 4.1%, but don't be fooled by that 4.1%. Austin is still down massively from the peak, you guys. Absolutely massive loss from the peak in June of 2022. Now, #2 metro area, also Texas at San Antonio at 2.5. We have a new metro area. This is my metro area. Houston is now the #3 declining metro area in the US. Holy smokes, sitting at 2.3. So again, #1, 2, and 3, now Texas. That's crazy. #4, Las Vegas at 0.9, and then another Texas at Dallas, another Texas at Fort Worth. Look at that. You guys, the 5 out of the 6 top metro areas of decline are Texas. That's crazy. Now, then it goes to Phoenix and then New York and then Portland at 0.4%. So maybe you guys are starting to understand why I'm so confident, or at least one of the reasons why I'm so confident that prices will continue to go down. I'm in Texas. Texas, literally, I walk outside my door and I can't escape all of the new construction. There's new construction everywhere, and these new home builders are offering incentives that resell an existing inventory they can't touch. They're offering 4.25% or 5% fixed rate, $10,000 in closing costs, 15 to 20% off the prices. I mean, they are throwing houses at people in Texas right now. Let's move on now to our data visualization and see the trajectory of some of these trends, starting with median sale price. Here's where we're at with median sales price. We're up only 2.7% year over year. So to Queen Crash Bro derogatory lady, what are you talking about 15%? You're out of your mind. House values are up 2.7%. And we look at the 4-week rolling average so that we don't have to wait for dishonest data and dishonest people. This is one of the best ways, absent MLS, to keep your hands to the pulse of the housing market. Again, median sales price is down week over week. But when we zoom in here, okay, when you look at the trajectory here, all right, and I'm going to really zoom in here because again, I really want to prove that they're manipulating their charts. Okay, so it updated from here to here, okay? And to me, that trajectory looks like it's going up, but the reality is home values week over week went down $900. Okay, but we can't see that in the trajectory. And people are all the time like, Travis, who cares? It's just a little bit. And my response to them is I care because I want to know the truth. And anytime I see someone is intentionally deceiving me, I will never trust them again. And so therefore, I don't trust Redfin. But again, we're at the mercy of the data because they have the most recent relevant data, in my opinion, to what's going on in the housing market. But again, you guys, we are down week over week, another $900. That means that we're off peak now by $11,000. We peaked around June 9th of this year at over 381,000. So we've lost over 11,000 from the peak, but also we're down from last year's peak as well by over $15,000. And as usual, you guys know that I believe that this is going to continue downward and we're going to end right here. The reason why it's important that people understand that it is possible that we end right there is because if we end down here, okay, with median sales price, that means that anyone purchasing, again, from June-ish of 2021 on is going to be upside down in their house. Unless they got a great deal, they're going to be upside down in their house with an inability to sell or refinance without having to come to the closing table with a lot of money. Take a look at median asking price. Median asking price has shot up. It has gone down week over week. You see the trajectory, really crazy trajectory right here. I think a little bit of that is some type of seasonality. Again, not 100% sure. I believe it has to do with the higher end houses. The lower end houses may be coming off the market, higher end houses staying on the market. I'm not 100% sure, but a massive increase in median asking price overall. But week over week, it's actually down. You guys can see that slight downward trajectory and median asking price. This one is so crazy. I know Redfin is manipulating their charts. Look at home buying payments are so high, it went off of the chart last week. Look at that. It went off of the chart. It's off the charts, you guys. Unaffordability is off the charts. Why so much foolish optimism still in the market? Why are realtors still leading people off a ledge into financial suicide? I mean, it's insane to me. It's wake up, realtors. And there's some great realtors. I have some great realtors that watch my channel, but most realtors on YouTube especially are just con artists trying to make a quick buck. And that's a fact. But anyways, mortgage payments are off the charts, you guys. It's up 10.1% year over year. That's insane. And year over year is from here to here. Obviously, we're up way more when we look at 2021. And that's really the rug pull right there. The rug pull is really the difference from 2021 and right now. That rug pull, the rug pull is real. And you guys could see right here that 2 years ago, mortgage payments were under $1,750. 2 years ago. In 2021, 2 years ago, mortgage payments were under $1,750. You guys, right now, they're close to $3,000. If you want to go buy a house, by all means, go buy a house. But if it's me, I'm going to wait for the Federal Reserve to continue the work. I'm going to wait for the balance to come back in the housing market. And I'm going to continue to maximize my purchasing power. All right, so here we have new listings. New listings is down only 4% year over year. So it is down, but only 4% year over year. It is trending a little bit upward. And that's a really, really good news because normally this time of year, we have a downward trajectory for new listings, as you can see from the last 3 years right here. So all these lines right here, this time of year goes down, except right now. Why is it going up right now? Well, probably as a result of those golden handcuff sellers that were on the sideline. They probably can't be on the sideline no more. They probably need to sell their house. So there's a need for people to sell their house, and there's an additional lack of buyers. So the buyers and the purchasing power right now absolutely getting destroyed. In fact, I will say that the people that were buying right now were the well-qualified buyers. So when prices start coming down, those well-qualified buyers, guess what? They're going to be chained to their houses, and you and I will have a better probability of finding the house of our dreams. Now, active listings is down, unfortunately, 14% year over year. We are sitting at 827. I need 1 million plus to win my bet. So Johnny, you might win my bet, because if we're gonna hit 1 million, guys, here's what the trajectory is gonna have to do. Okay, the trajectory is gonna basically have to go up like this. Is that possible? Yeah, it's possible. Some type of black swan, REIT companies, STRs, but I'm running out of time and I don't like where I'm at. But the good thing is that's actually been going up and not down like it traditionally does. All right, take a look at the months of supply available on the market. We're sitting at 3.2. That's good. We were under 3% for a long time. Now, week over week, this kind of plateaued a little bit. You can see the plateau right here. Now, obviously, as you should know at this point, we need 6 months of supply in order for the market to be considered a buyer's market. But I'll consider the market to be a buyer's market right now because ain't no one can afford no houses. And slowly sellers are starting to wake up for that. But right now we're sitting at 3.2 months. Hopefully what will happen is the same thing that happened last year. You guys can see here where supply actually starts and continues to shoot up. That would be an absolutely great thing to happen. Let's keep watching months of supply available. Looks like we finally hit a new record of listings that had price drops. We have a new record. We're sitting at 6.8%. This exceeds last year. And remember, last year, this time last year, house values and prices were plummeting. So right now, the price drops are accelerating past last year. In fact, again, we have a new record. It is now over. Let me draw the line. It is now over the peak last year. So we're slightly over the maximum peak. I mean, look at guys, price cuts have absolutely been skyrocketing. Now, obviously the price cuts lag, and where we start to see the price cuts is median asking price. And then after median asking price, we start seeing that in median sales price. But it is an absolutely beautiful thing that pretty much everyone that has their house listed right now, not everyone, but a lot of people are having to cut the price in order to sell their house. And what that does is create comps, and comps create value, basically. Okay, let's end here at Redfin home buying demand. This is also down 5% year over year. That's awesome, you guys. We may hit a new record. I don't know. We would have to be about right here to hit a new record. But regardless, we are the lowest we've been in demand in the last 4 years for October. We have the lowest demand. So we have the lowest demand, we have the highest price cuts, we have supply going up. I mean, we have all of the telltale signs that the housing market is going to continue to collapse and prices will continue to go down. I believe prices are going to go down for several years. I don't believe at this point that buying seasonality is going to come back next year like it did this year. I don't think that's going to happen. It might happen, but I especially don't think that's going to happen if we finally start our recession and unemployment starts to become unhinged. And the fact that we now know that the Federal Reserve has to keep interest rates elevated higher for longer, obviously, that's going to continue to cripple the economy, the housing market, and the labor market. So long as no black swan events happen where it forces the Federal Reserve to cut rates, I think we're in good shape. I think all we really need to be doing right now is stay patient, work on our purchasing power, credit, income, and assets, and understand what we want in our own local house market. And I really want you guys to use the data to find the deal. And other than that, if you're out there investing in real estate, you know I wish you luck and I hope you win.